Bargain Brothers sliding through with another quick video. And at this channel, we basically do money. So I'm talking stocks, crypto, credit cards, credit unions, banks, side hustles, travel hacks. All of that stuff is touched on. If that's what you like, go ahead, don't delay, do it now. Please hit the like, subscribe, share, pop the notification bell while you're at it. I greatly appreciate it. It will help push this video out, get it out to a wider audience so we can spread this message and let's all level up financially together. Now, without further ado, I'm gonna hop right into today's subject matter. I haven't talked about the stock market for a while because, quite frankly, the stock market's been in the pits. But in this video, I want to show you how you can win in this crummy stock market that we are in. So in order to do that, let's have a quick conversation first. So during the Barack Obama presidency, the stock market went on like a nice slow incline. He got it when it was definitely in the hole, and it went on a nice slow incline. When Donald Trump became the president, the market started trending even higher. Then 2020 came, we went into a historic pandemic. Everybody thought that the world was going to end, everything was going to fall apart, but just the opposite happened. We had a historic bull market as far as 2020 into 2021. That transferred into the automobile sales market. It also transferred into the housing sales and rental market. They all went ballistic, guys. But you know what they say? Gravity is undefeated. No matter what your real estate broker told you. I'll repeat it. Gravity is undefeated. So now we are in the infancy stages of what could be a historic pullback. We are definitely seeing historic inflation. Currently, they're saying around 8.5%. I say put a 1 in front of the 8 because there's no way that the inflation rate is currently at 8.5%. But that's what they're telling us. It's around 8.5%. And things are really, shaping up to be a mess. Interest rates are rising, but they're nowhere near historic highs, but they're rising from what people have gotten used to in the last few years, which is paying historic lows. So I'm going to show you how you can win in this stock market and still make money, even though it's falling to pieces. So quick history lesson, shall we? I'm just going to throw a quick graphic up. So you'll see in this Bloomberg article, it states that people should brace for a 100 basis Fed point hike as inflation stings. And what that means is that Jerome Powell, who is the Federal Reserve Chairman, and the Federal Reserve sets the interest rate, basically decides in what direction the country is going to move, how much it's going to cost to obtain money. He's thinking about doing a 100 basis point increase, or he's being pressured to do it. That means that interest rates will go up a full 1%, which is pretty big to go up a full 1% in one hike. The last hike that we had was 50 basis points, which is a half a point. And that was kind of, made some noise because rates had been so low. Remember, in January, rates were around 3%. Now rates are getting close to 6%. That's almost a 100% increase in less than a year. And if this next rate hike ends up being a full point, then it will be more than 100%. So let's look at one other graphic. So I'm going to get this one up here. And it's saying basically the market is saying to brace for 100 point Fed rate hike as inflation soars to new highs. We already know what we're dealing with. And there's our buddy Jerome Powell, who is the Federal Reserve Chairman, on this picture here. And we already know we're dealing with record high gas prices all over the country, record high food prices, and then record high prices for all types of other consumer goods, from household cleaning agents to tools that you might need to, do a simple repair of your car. I mean, basically clothing, everything. Everything has just gone up, 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 up. So that's what we're dealing with, okay? So let's look at some stuff with the market. So here is the Nasdaq stock exchange. So this is the weekly chart that I have up here. And you see a couple points here. If you look to the left of this picture near the bottom, you're going to see where the Nasdaq was at when the pandemic was like at its bottom. Okay, so that's around April of 2020, and it was around 6,600 points. It got as high as 16,200 and something. Okay, currently it's been trending down for the last several months now. It's been trending down because this is the weekly chart, so each one of those candles represents a week of movement. Currently the Nasdaq is at 10,080, so it's around 10,000. That line that you see, the black line, represents the 200-week moving average, which right now it is still technically above it, so it's considered to be in positive price strength. But personally, I think it's going to get below it. And those other two moving averages, what you see is the 20-week and the 50-week moving average. The 50-week is the red line, the 20-week is the blue line. When that red line gets all the way down to the black line, that's considered a death cross, and that means that you are definitely in negative price strength. Right now, that 200-day, which is the black line, is right at 10,975, so we're right there at it. But it might still take a while, a little bit more time, before the 50-day gets to it. But it definitely looks like this is going lower. This is definitely going lower, guys. Okay. All right. So I'm going to put up the Dow Jones now. So this is the Dow Jones chart. And this is actually the Dow Jones chart for the last, what is this, year? Okay. So it shows right now, for one, the Dow Jones is down about 11% in the last year. It peaked back in early January at 36,952. I know on my graphic here, you'll see where it says 36,799, but at the bottom on the right, you'll see the 52-week high is 36,952. Now, at the pandemic's worst, I think the Dow was around 19,000. So it basically doubled in the course of a year and a half or so, which is unheard of. And it's been on the slide for a while, and it's going to continue to slide. It's currently at 30,500 or so, and it's trending downward. Me personally, I think it could go as low as 27,000, maybe even lower. We'll see. But the fall is not over. This thing is still going down. It is not going up, and it's not going to go up for a while. And I'm going to talk about why real quickly. We have all types of economic data that sucks, okay? The housing numbers, the mortgage applications are going way down, and they've been trending down for a few months now. Even though the housing market is technically still hot, less people are seeking mortgages, less people are seeking refinances because the rates have gone up, and they won't save as much money as they would if they had refinanced, say when rates were 3.5%, to where now rates are getting closer to 6%, 5.5%, 6%. So they won't save as much money. So that's making the refi applications go down. The oil prices are through the roof, as everybody knows, as well as food and everything else that has to do with inflation. All of this economic data, which is bad, means that the market is highly likely to go lower. Okay? It's highly likely to go lower. So the Dow Jones is sliding, the Nasdaq is sliding. So I'm going to throw a picture up of a guy that you need to know about. His name is Paul Volcker. And Paul Volcker was the Federal Reserve Chairman, which is the job that Jerome Powell has now, back in some really tough economic times in the late 70s through the middle 1980s. Some really high inflation times. This guy was in charge. His name is Paul Volcker. He lived from September 1927 until December of 2019. So the man, got more than 90 years. And he was the Federal Reserve Chairman from August of 1979 until August of 1987. And those were some challenging economic times during those years. Dealt with some really bad inflation, dealt with oil shortages, dealt with lots of economic problems. Now, if Jerome Powell decides to go like Paul Volcker, he's going to make some really robust moves. Paul Volcker, when he was the chairman of the Federal Reserve, decided to really go just off the rails as far as raising interest rates. Okay, so all you guys that are crying about interest rates at 5.5, Paul Volcker had interest rates in the teens, and they topped out at 21% in 1981. And he did this in an effort to curb inflation because the inflation was off the charts. So the reason I'm bringing up Paul Volcker and giving this history lesson is because I want you to know where this thing could be headed, okay? And this all plays into why I think you can win in the stock market right now, even with all this madness that is going on. So Paul Volcker, chairman, Federal Reserve chairman, 1979 to 1987, known for basically combating inflation by raising interest rates through the roof. And these type of rates would just kill real estate agents, of which I am one. Licensed real estate agent over a dozen years. If rates jumped up to 10, 12% right now, half of the agents in this country would be, going to work at jobs, regular jobs. They would not be able to sustain what they're doing if people had to pay these types of rates to get loans. But we could be headed there, guys. I don't know if we are, but we could be headed there. Now, this is how you win in the stock market with this. Bear with me just a second. You trade options, and in particular, you do options puts. Now, what is a stock option? Stock option gives an investor the right, but not the obligation, to buy or sell a stock at agreed upon price and date. And there's two types of options. Puts, in which you are basically saying that the stock will go lower, or calls, which you're saying that the stock will rise. Now, I think that buying puts is the way to go, and it's going to be the way to go for a while. You're going to have to get your chart reading skills up if you want to make the most of it, because there'll be some fake rallies. There'll be some pushes where, things go so low, then the big institutions will buy, push things up a little bit, and then they'll sell and take their profit. And the prices will fall again, and you'll probably see this pattern repeat, rinse and repeat, rinse and repeat. But if you're putting your puts in at the tops of those fake rallies, when that price starts to nosedive, there's your profit, because those puts are going to start printing money, okay? So that's just a little quick history lesson, synopsis, and then a strategy to win in this awful stock market that we're in right now. Hey, if you got thoughts or comments on that, I would love to hear it, or I'd love to see it, read it in the comments, drop some emojis. Tell me what other subjects that you would like for me to touch on. If you got other questions about the stock market, if you're not that familiar with it, hit me with those questions too. I am available. So I hope you enjoyed that. Please subscribe, like, and share if you found value in that content, and I hope you did. And on that note, the Bargain Brother approves this message, and I'm out, guys. See you next time.